This mini-lecture introduces integrated reporting and positions it as a desirable goal in the reporting journey of organisations. We see this journey as one in which the long-standing practice of acknowledging financial goals and financial stakeholders to the exclusion of all others is gradually shifting focus. Examples of this shift can be seen in triple bottom line reporting, where economic, natural environment and social impacts are reported. A further approach is observed in the Global Reporting Initiative, which is a structured approach to enhancing the value and rigour of sustainability reporting. In this course, we'll take that journey forward as far as integrated reporting and consider the 6 capitals instead of only one, financial. As we mentioned, we see ourselves as being on a journey, and that journey starts with the well-developed models of accounting and accounting reporting and takes us further now into reporting other aspects of business which are important to all of us in society. And so we're moving from accounting reporting through to a fully integrated reporting environment. And we see the journey in broad terms as we've illustrated on this slide here. We start off with financial outcomes, which by the time you get into this course, a couple of modules into this course, you will see them as being familiar and you'll understand the language and find that you're quite familiar with a lot of the concepts in accounting reporting. In accounting reporting, we deal with the efficient use and the return on financial capital. However, there's now recognition that there are other capitals which are equally important, but for which we don't yet have well-developed measurement models. A lot of businesses are already embarking on sustainability reporting, and they do that in reports which are usually unrelated, but they sit beside the financial reports. These reports capture important information on environmental or natural capital and the outcomes of using that. A step further from that is to enter the ESG reporting environment. ESG stands for environmental, social and governance, so it's an extension of sustainability reporting. Again, this area is not fully integrated into a single report, but it does extend the focus of the reporting into areas which are of value to most people in our communities. The ultimate goal here is to get to fully integrated reporting. And when we get to the end of that journey, we'll be looking at a fully integrated report that explicitly links 6 separate capitals, of which financial and natural capital and social capital and relationship capital are only one part each. And it will describe how the strategy of the organisation links all of those capitals, and the understanding that we want the return to all of those capitals to be appropriate and to be adequate, and also the understanding that sometimes we may have to observe that performing well on one may have resulted in performing not so well on one of the others, and it's important for us to understand all of those linkages. Only when we understand the full link between all of the different capitals can we make fully informed decisions as responsible business people. And so that journey is represented in this diagram, which is now in front of us here. It's from some research done by PwC in 2011, and they express the nature of this journey from the left to the right-hand side in that diagram by indicating on the left that whilst these components might be addressed to some extent, they're not integrated. They stand separately and they're addressed separately. As we move into the middle, you can see a gradual agenda which brings some of these separate reporting areas together. It includes them, but doesn't necessarily make the full strategic alignment and linkage between how they all fit together. And the goal of the discussion is at the far right-hand side of that diagram, where we recognise that our whole business model and its strategy and everything we work towards is integrated, and that our goal will be to enhance all of the capitals, not just the financial capital, not only the sustainability or natural capitals, but all of the capitals will be enhanced, and we understand the linkages between all of those capitals within our business model. So let's start our discussion of integrated reporting by talking about, first of all, triple bottom line reporting, which is a well-known and acceptable and widely accepted method of reporting on economic, environmental and social outcomes. So economic, environmental and social outcomes, and triple bottom line, of course, is those three, and a good TBL will report outcomes on all of them. Integrated reporting, however, would take the TBL and include additional information about governance, and it would link all of those elements through the organisational strategy, and in doing that it would encourage us to think about and understand how the entity creates value. And by that I don't mean only financial value, I mean value on all of those other measures: environmental, social, governance and ethical. So our goal with integrated reporting is to understand the linkages, or possibly the trade-offs that might need to be made. If we're to enhance one area, will there be costs in other areas, or perhaps in enhancing some areas we can enhance the total value that we deliver as an organisation. These are the challenges that we have to start thinking our way through. We can't put aside anymore and say it's too hard. It's very clear to many of us in the business world that now is the time when we need to really embrace this line of thinking and see if we can kick it a long way further down the alley. So starting with the TBL, environmental outcomes, for example, might report greenhouse gas emissions. Social issues might report employee statistics, employee well-being, possibly report some charitable contributions to society. Some organisations will report their work both in employment and in community assistance with minority groups. So social issues can be pretty wide, and some organisations do some of them very well. The economic performance that we talk about here is the traditional financial reports and being able to analyse and understand what they're telling us. We need to acknowledge at this stage that any sustainable business must be financially or economically sustainable. If it's not financially sustainable, then this whole discussion ends up nowhere, because the organisation won't exist if it's not financially sustainable. So the financial part of the discussion is the starting point, the first rung in the ladder, if you will, and we need to then surround it with all of the other parts of the discussion and understand the linkages between all of them. Okay, now the GRI, the Global Reporting Initiative, and we're up to GRI 4 at the moment. The GRI is a non-profit organisation, and it was established for exactly this purpose, to help organisations to develop and report on their environmental and social achievements. So their objective is to enhance the quality, the rigour and the utility of sustainability reporting. You will need to visit the GRI website, and it's listed there, and become familiar with what it is that they offer. They offer a lot of assistance to organisations who decide they want to embark on this journey. They put organisations in touch with other similar organisations, and organisations are able to share what they've been doing, problems that they've perhaps solved, others that maybe they're still wrestling with. So there's a community of organisations who are involved in this. And the GRI also provides frameworks which organisations can adopt or partially adopt if it will help them to implement their reporting in this area. They have guiding principles about the content of the report and about the quality of what is reported. And so when they're talking about the content, you can see a lot of these principles line up and parallel quite well some of the financial principles that we've talked about. Materiality. Will knowing this piece of information make a difference? Stakeholder inclusiveness. Let's include the people who are involved in this discussion and going to be affected by it. Let's make sure that what we report is complete, and let's make sure that we put all of these principles in context. The quality principles, again, are very similar. You'll recall we've already discussed in the financial environment the need for reliability, for accuracy, for comparability, and for timeliness. Clarity is also important in as much as what we report needs to have meaning, and that meaning needs to be clear. What we haven't discussed in the financial arena, of course, is the notion of balance. So balance will be another quality principle that we'll need to understand and embrace if we're to incorporate all of the different sources of value into an integrated report. Here's an extremely important difference between sustainability reporting and integrated reporting. I can't stress this strongly enough. Integrated reporting is understanding the linkages about how an entity creates value through all of its performances, economic, environmental, and social, how it creates value. And in that, it differs from sustainability reporting, which focuses on impacts. So focusing on impacts, the discussion runs along the lines of, well, this is what we've done, this is what we've achieved. Integrated reporting, by contrast, asks the question, how is it that we can create financial value, social value, environmental value, and others through linking all of the various aspects of our performance? So the goal of integrated reporting is to increase the sum total of value in all areas of value. Let's stress it again, not only financial value. Now, integrated reporting is mandatory in very few regimes at the moment, South Africa being the one where it's notable, and it has been mandatory for a couple of years. It would pay you to see if you can research and see some of the commentary on how well, or some of the difficulties that have been experienced in South Africa. They should inform our own debate and help us to understand what we're trying to achieve and help us to avoid some of the pitfalls. So far in this presentation, we've mentioned the 6 capitals a number of times. Well, formally, here they are now. This is the list of the 6 capitals that a fully integrated strategy and reporting model will address. Every one of these capitals is a scarce resource. Every one of them is something that we need to use carefully and responsibly and ethically so that we get optimum return on all of them, and so that we don't diminish any of them, particularly diminish them in ways that can't be repaired.